Attention, everybody. The views and opinions expressed on this show are not necessarily those of Acts Ministry, Acts Media Group, and or their affiliate and subordinated ministries and or nonprofits. Without any further ado, it's the New Gold Standard with Tony Hammock. Take it away, Tony.
Thanks, Matt. Good morning, everybody. It is a balmy 47 degrees here in Springfield, Missouri this morning, at least what it was when I got up. Anyway, I am going to go and urge you to enjoy the sunshine today because it's supposed to be rainy tomorrow and the next day. So anyway, we've got a fun show scheduled for this morning. We're going to go over some of the situations going on out there in the precious metals market. The theme of the show is alternative assets, and we've been spending a lot of our time on gold and silver. But before we get to that, what I thought I would do is let's get into our stewardship course. I like this, and so I thought I would start out with it this morning just because it gets me off to a good start. Hopefully you will agree. And this is, I believe, 6 out of 7 courses in this particular one. This one's called God's Perspective on Money. So next week will be the last course in this one, and then I'll have to go find another stewardship program for us to work through and stuff. But this is number 6, and the devotional today is It's All About Him. I want us to look again at the last 2 verses from our last devotional, 1 Timothy 6:18-19. Let them do good, that they be rich in good works, ready to give, willing to share, storing up for themselves a good foundation for the time to come, that they may lay hold on eternal life. I think it is beautiful the way verse 19 ends, that they may lay hold on eternal life. Paul is writing to believers here, and he is not saying they must do this so that they can get saved. Rather, I think he is saying that when they are rich in good works, ready to give, willing to share, then they will lay hold on what eternal life is all about. It is not about the things you possess. It is not about the blessing God gives you. It is about a relationship with him. Jesus said in John 17:3, "This is eternal life, that they may know you, the only true God, and Jesus Christ, whom you have sent." If you are blessed, realize the main thing is not your riches and wealth. They can be very transitory. I have a friend who years ago migrated from a country in Central America that had experienced a military coup. Her family was quite well off, having property and wealth that had been passed down through several generations. But after the coup, the new government seized all the family's properties and wealth. All was lost overnight. This story could have turned out badly, except that this woman is an exceptional Christian with a great attitude. She has built a successful life here in the U.S. and has chosen not to be bitter or resentful over the past. She has kept her trust in God, realizing that no matter what happens, if she still has Him, she will be all right. Friend, keep your eyes on God and keep your trust anchored in Him. He is what life, real life, eternal life is all about. And wow, what a powerful devotional for today. Once again, that was based on John 17:3, and of course they kind of picked up from last week's one, which was 1 Timothy 6:18-19. And that story about the woman coming up from South America or Central America is powerful. I don't know if I would have that ability, to have generations worth of wealth and property taken overnight by a government that had just moved in, and then be able to forgive. Forgive's kind of an interesting concept. I don't know. My wife and I were talking about that the other day, and I've been kind of dwelling on it here lately as far as, like, let me see, have I forgiven everybody I'm supposed to? Anyway, so I haven't heard from anybody out there as far as any solutions for our mounting debt, but I did come up with a couple of things that I want to, in some cases, play, and in a few cases, read, just because I think they're very, very timely. Before that, though, let's get into the pricing. because the pricing...
Our next guest made waves when he talked about the coming economic downturn, calling it the greatest depression ever. So what can we do to protect our investments?
Sorry about that. Here's what we're going to do. We're going to go back to the pricing. There we go. There we go. I just needed my phone to cooperate with us. Sorry about that. So these prices I'm going to quote are as of 9:07 this morning. Gold was $1,472.30. It's down 60 cents for the day. Silver is $17.20. It's down a penny. Platinum is $918. It's up $4. Palladium is up $7. It's up $1,775. And rhodium is off $25, but it is $5,975, and all those are for ounces. So imagine that, $5,975 for an ounce of rhodium. Copper, now we're switching from ounces to pounds. So a pound of copper is $2.66, as in $2.66. Nickel is $6.48. Oops, they just switched. It moved. $6.49. It literally did right there. Aluminum, 79 cents a pound. Zinc, $1.07. Lead is 90 cents. And uranium is up 65 cents on the day. It's up to $25.30 a pound. Crude oil is up 43 cents at $55.64 a barrel. And so far this morning, the Dow Jones Industrial Average is down 69 points to rest at 27,864. And, you know, we've had a lot of volatility of late in the markets. Some of that is because of the ongoing headlines about the trade war. And what I thought I would do is there's two people I really, really like in the industry as far as who I follow and everything. One is Danielle Carboni, I believe is how you pronounce her last name. And then the other gentleman is the one she's going to interview this morning. I caught this this morning, and I thought it'd be a great thing to play for us all to hear, because she's interviewing one of the top gentlemen in the world as far as not only gold and silver, but investments and the entire investment industry and so forth. So without any further ado, I think this interview runs about 9 minutes. So I think you'll find it very informative, but let's take a listen. And then when we're done with that, I got a couple other things that I think are very timely. And let me make sure I just get this to the beginning.
Our next guest made waves when he talked about the coming economic downturn, calling it the greatest depression ever. So what can we do to protect our investments? Joining me today, Gerald Celente, publisher of the Trends Journal. Gerald, welcome back.
Well, thanks for having me.
So lots of ground to cover with you today, Gerald. Let's start with some of the news this week, which will tie into your thoughts about the greatest depression, the Fed lowering rates as markets expected. Do you see this at all as positive news?
Well, it's positive for the equity markets and for the huge debt that corporations are taking in to keep expanding. But on the negative end, they're building up more debt into the already over $250 trillion debt bubble. So what it is, I call it monetary methadone. They're just shooting in more money to keep the addicted bull running. It's not boosting economies around the world. We're looking at a global slowdown, and the numbers are there. And even people like, you know, the IMF, the World Bank, one after another, are warning of recession. Matter of fact, Ray Dalio, the head of the largest hedge fund in the world, Bridgewater Associates, he's following what we've been saying. First, we came out this past June and talked about the beginning of the gold bull run when gold was $1,332 an ounce. And he came out 2 weeks later and said he was bullish on gold. Remember, this is the head of the largest hedge fund in the world. And then just a few weeks ago, he's worried about a Great Depression.
Yep.
So the people see it. And again, it's just artificially being boosted by central banks injecting more cheap money, lowering interest rates. And now we have the Federal Reserve. What? We're not going to call it quantitative easing. We're going to make up another story. We're pumping in $60 billion a month to buy treasuries. Oh, and by the way, $120 billion a day into the repo markets.
So I have a quote for you here. Janet Yellen, as you know, former Fed chair, has said that two things kill off an economic expansion: financial imbalances and the Fed. So do you agree with her that the Fed may be wrong and may actually expedite the coming recession?
No, what the Fed is doing is they're trying to hold it back by pumping this cheap money in. But it's only temporary. You're seeing housing sales go back up, mortgage refis go back up because the money is cheap. But the earnings aren't there. The debt levels for the consumers are getting heavier and heavier. So it's artificially propping it up, just like it did since the Panic of '08. It hasn't filtered back to society. It's only gone to the 1%. And I'm not making that number up. You have three people in the United States, Bezos, Buffett, and Gates, have more money than half of America's population. And then you go around the world, according to the Oxfam Institute, what do they have? 26 people have more dough than half the world's population combined. So no, it's not working. It's only making it worse.
So let's play out this scenario, Gerald, because you have said the next recession would be worse than the Great Depression. How are you protecting yourself, and where should investors go as a safe haven? I'm pretty sure you're going to say gold, but what else?
Well, I can't give financial advice. I'm not a financial advisor, but speaking for myself, I call it guns, gold, and a getaway plan. Gold is number one. And that doesn't, one of the things that I learned, took me a lot of years to learn, is that when things collapse, it doesn't collapse everywhere and at every level. And then things start coming back. So when the collapse happens, it's time to wait and look. But there's 7.5 billion people on the planet. Not everybody's going to go down. So there's going to be opportunities as well. But for me, speaking only for myself, gold is the number one investment. And I've been saying that since I began buying gold in 1970.
So are you all in gold right now, Gerald?
Yes.
Physical?
Both. Because I have, retirement things. I put in, IRA, the GLD ETFs.
Okay. How about any of the other precious metals? Silver, platinum, palladium?
Yeah, I have some silver, but gold is my priority. I have 2/3 gold.
I also want to get your thoughts on what we're seeing on a global scale here, Gerald. We were having a conversation offline before, no shortage of countries here: Ecuador, Chile, Algeria, Lebanon, Colombia. Have you ever seen in your lifetime this many uprisings happening? And what is this signaling?
It's signaling the people have had it. Again, the money's gone to the 1%. When people lose everything and have nothing left to lose, they lose it. And they're losing it. And this is part of the Greatest Depression. It's a stage one. It's already happened. Millions of people taking to the street, protesting that they don't have enough money to live while they're getting higher taxes, costing more for everyday living. So they've had it. And very important, this is extremely important. All of these movements don't have leaders. Whether it's Hong Kong, whether it's Spain, whether it's Lebanon, what's going on in Iraq with the massive demonstrations, Ecuador, Chile, Bolivia, Colombia, one after another, no leaders, because the people feel it. And this is part of the Greatest Depression. When we say it's going to get worse, when the Great Depression hit, there were 2 billion people on the planet. We've added 5.5 billion more. They're out of work. They're living in poverty, violence all around them, corruption. So this thing is exploding.
And while this is happening, I want to know if you think there's a correlation here. We've seen Bitcoin take off once again. Do you feel that people are looking or desperate for other forms of currency here, of alternatives to their currency?
Absolutely. And there's the people that don't believe in gold or silver or other precious metals, and they're going into cryptocurrencies. And again, you're going to start seeing it increase, particularly as economies go down, their currencies weaken, inflation skyrockets. Why wouldn't you want to have an alternative to a digital currency of a state backed by nothing and printed on nothing with huge amounts of debt load on top of you?
All right, let's bring it back home here. Gerald, we brought this up the last time when there was talk about the impeachment. Latest news right now, the House just passed a resolution formalizing the impeachment inquiry into President Trump. I know last time you said this is just all a massive waste of time. Have you changed your tune?
No, it's a sick joke. I mean, first of all, what has he done? I'm no Trump fan. I can't stand what he's doing, in his foreign policy with Iran and Venezuela and a lot of other things. But what did he do? He wanted to find out how dirty was the Biden deal. His little boy Hunter gets 50 grand a month, makes $3 million, and knows nothing about anything about the industry, Burisma Energy, or the oil business. So yeah, Trump wants to use it as a leverage to win the presidential reality show. Is this an impeachable offense? How about an impeachable offense starting wars based on lies? Let me tell you something. That Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. The big issues are ignored. It's the presidential reality show, and it's the Democrats against the Repulsivekins as I see it.
I think I'm going to leave viewers with that thought from you, Gerald. Always appreciate your passion and your thoughts. Thank you so much for joining us today.
And thank you for all that Kitco does to keep the people ahead of the trends and on top of the news.
All right, thank you so much, Gerald. We will see you real soon, and we will be back tomorrow.
All righty. Well, that was an earful, and that is the person being interviewed was Gerald Celente, publisher of the Trends Journal, and obviously those were his opinions. He made it very.
Our next guest
made it very clear to bring that out. And then the interviewer was Daniela Camboni, who is the editor-in-chief from Kitco News, and I have started following both of them now over the last couple of years, just because they have some interesting things to say about our situation and stuff. And, I think I said it last week and maybe the week before during the telethon or something like that. My motive is not to be a Chicken Little, the sky is falling, but my motive is to try and provide information so that you can not only, educate yourself and maybe open up a couple of windows as far as like, oh, maybe I should read this publication, or maybe I should talk to this person or listen to this radio, or whatever it may be, but then to be able to basically protect your family. When it comes right down to it, that's what it's all about. I mean, I love the way he sorry about that. I love the way he talked about, or she asked him about Bitcoin, and he said, well, yeah, I mean, Bitcoin is popular with some folks, especially the folks that don't like gold and silver. And, we're set up at some point to have a show that's going to focus on the cryptocurrencies, the Bitcoins, the Ethereums, the Litecoins, and so forth. Right now, there is a story out that China is getting ready to launch a new cryptocurrency of their own that will be backed by gold. And right now the time frame is kind of projecting out 6 to 8 months. Excuse me. And the thought is that when that is introduced, it is going to be a harmful impact on the U.S. dollar as far as being the currency that most people turn to. And, that's one of the reasons that we always like to talk about gold and silver, because it might make a lot of sense to have some. I'm not saying put all your money in gold and silver, but, a lot of the pundits, these talking heads that you see on TV, and myself included, we talk about 5, 7.5, 10% in gold or silver so that it can work its magic when, there's a recession or things are tough or whatever. Here's one thing I found interesting about that interview, and then I'll move on to some other things I wanted to cover. He talked a little bit about how few people at the top have all the money. There's like a couple here in the U.S., Jeff Bezos and Bill Gates and Warren Buffett, and then he talked about the world where it was like, what did he say, 25 or 30 people have more money than, half the people in the world. And, we've got, 7-some billion people right now on the planet. And I'll always remember a presentation I went to. In my prior life, I traveled all over the world and all over the country, and was talking about investments and different things in different locales and stuff. And I was at one meeting up in Minnesota. This is going back to early '89. And the keynote speaker at that particular meeting was a Dr. Iben Browning. And most of you probably in the listening audience probably don't know Dr. Iben Browning. He has since passed away and stuff. But he was a climatologist. And what he focused on was volcanic activity throughout history. And he could show statistically that, there were huge volcanic eruptions that would put the volcanic ash up in the atmosphere, and then, crops would fail, and then the people would go hungry, and then there'd be a revolution, and they would overthrow the government, and then, they'd move on and stuff. And it was just amazing to me that, he could pinpoint it to the fact that the masses became hungry. And I found that amazing. I've got more about Dr. Iben Browning that I can cover here in a minute, but I see Matt has the golden microphone, which means that's his hint to me that he wants to do a quick ad.
Yeah, it's only natural that we should use a gold microphone to do this.
Of course.
Hang on just a second, and we will get it. I've set up some shortcuts. So all I have to do is just hit one button. Hey, everybody, Matt here from the producer's desk here at Axe Media Group headquarters. Today's show is brought to you by naturalsolutionsstore.bz. So my question is this. If I can find it, are you having issues with your digestion? Do you get stomach aches? Are you not regular, quote, end quote, which is never really good if you're not regular in your digestive process. It's about the nicest way I can think of saying that, Tony. So if you're having problems with that, if you want to improve your digestive health, go online, naturalsolutionsstore.bz, and pick up a bottle of all-natural probiotics. Okay, now this product, so this is a balanced spectrum of live beneficial bacteria, and a powerful blend of 7 essential strains, suitable for vegetarians, dual mode operation, maintenance, and high intensity repair. The benefits of this is these probiotics are especially formulated for adults, designed to help your body's natural digestive health through delivering essential bacteria and organisms that lead to a healthy digestive system. Contains live bacteria for better results, formulated to act in the digestive tract, conforms to USP standards. These are made in the USA in an FDA-registered facility, and it's manufactured to the GMP standards. And this product is suitable for vegetarians. I've already said that. So these probiotics are ultra-strength, broad-spectrum, plant-sourced enzyme formula that enhances digestion of proteins, carbohydrates, and fats. It provides a powerful digestive support to reduce the occasional digestive discomforts like gas and bloating and other things that need not mentioning here. It helps to unlock the
Thank God.
nutrient goodness found in your food. So it helps to restore damaged intestinal and digestive health. Probiotic there's 30 billion organisms within the 60 capsules. It's a dietary supplement, of course, boosts immune system and promotes allergy relief. Now these capsules deliver higher potency and greater stability. Like I said, made in USA to the highest standards of quality. So this sounds like something that you would like. Go online, naturalsolutionstore.bz, and pick yourself up a bottle today. Back to you, Tony.
Thanks, Matt. Those things are always amazing to me, that you could take something like that and it can actually help you digest better.
It's amazing what bacteria can do.
Oh, I know. And Natural Solutions Store has so many neat products that we need to have you talk about from time to time and stuff like that. You know, I was talking about Dr. Ivan Browning. I just want to kind of finish that thought because I just, you know, he's one of those guys I met and I just loved his presentation and the way he carried himself and stuff. And, you know, he's the one that literally predicted the earthquake in 1989 that happened during the World Series over in San Francisco. And for those of you that are here in Missouri in our listening audience, I mean, the way he predicted it, because I was there when he did it, he just said, hey, all of my indicators show me that, you know, there is going to be some major activity somewhere along the West Coast, probably in the fall. And of course, San Francisco during the World Series, you know, was right on target there. And then, unfortunately for him, he made the comment that the next potential area that he saw a lot of activity happening was the New Madrid Fault, which we're all familiar with being a little bit southeast of us here in Springfield. If you're in the listening audience over in southeast Missouri, it's just south of you. But anyway, everybody, you know, kind of geared up for that. And then when it didn't really happen, I mean, you know, like the magnitude it did in San Francisco, he got a little criticism, you know, as far as maybe being wrong and stuff like that. And like I said early on, you know, he has since passed and stuff. But he was a wonderful individual, and he has a couple books. I have both of them autographed by him. If you ever wanted to you know, take a read and get some really good information and stuff, especially on climate throughout history, I would urge you to do that. You're always welcome to call me at 417-755-0700, or you can email me at tony@thegoldaffiliate.com. And back to gold. One of my favorite people is Egon von Greyerz. And I may be mispronouncing the last part of that last name, but Egon runs Matterhorn Investments over in Switzerland. And he has just got a knack for writing, and he interweaves history and current situations and stuff like that. And he had an article that actually was published on the 18th, so 2 days ago, I guess that'd be Monday, that I thought I would just kind of read through here. There's a little bit of it that might be a little bit boring on the very first part here, but the tail end of this article, and it's not that long, is definitely something we should all know about. And the title of his most recent article is "Gold Price is Not the Price of Gold." What? Okay, so the gold price is determined in a casino with massive leverage and has nothing to do with the real price of physical gold. More about that later in the article. At what point will gold turn from a minority interest attracting less than 0.5% of world financial assets to a mass market investment? 3 decades ago, I identified, now he's talking as him, Egon. 3 decades ago, I identified physical gold as the best asset to hold for wealth preservation purposes. Then almost 2 decades ago, we decided to invest properly in physical gold for ourselves and the investors we advised at the time. And he's referring to Matterhorn Investments that he manages. Part of our wealth protection plan was obviously to store the gold outside the area we saw as the biggest risk, namely the financial system. Anyone who holds gold in a bank, ETF, or some gold fund has not understood the purpose of physical gold. 99.5% of investors don't understand or hold gold. Remember Ryan Long's analogy of if you hold gold and you get on the Titanic, they're giving you a life preserver you can use right then, as compared to if you have it in the form of a ETF or a gold fund or something. You know, basically you get a certificate saying you're entitled to a life preserver. So, you know, but here again, we've got somebody that believes in holding actual possession of the gold and the silver. Being holders of a minority asset means that 99.5% of the investment population sneers at you and believes you live on a different planet. As a company who passionately wants to help others to protect their wealth, we are fortunate to meet like-minded people, but most of our clients feel very isolated because they have no one to discuss their concerns about the world with. I would advise anyone with a gold interest to attend a good precious metals conference. In the last 2 weeks, I've been speaking at 2 excellent gold conferences. One was the Gold Symposium in Sydney, and the other one was the Edelmetallist in Munich. And that was the International Precious Metals and Commodities Show. It is important to pick a conference which includes many participants talking about the risks in the world and who see gold as a remedy against these risks. Most gold conferences are more geared towards gold mining and therefore less interesting for the wealth preservationist. For anyone who wants confirmation that they are not alone in their analysis of the risks in the world, it is good for the soul to attend one of these gold conferences. Both the show in Sydney and Munich had a very enthusiastic crowd. For someone who has written newsletters for many years and appeared in interviews like myself, most people in the audience will know you and want to talk to you. The Australians are more expressive and want to shake your hand and have a photo taken. The Germans are a bit more shy, but also have a lot of questions. Both conferences were very well attended, more than in previous years. Now, something rotten in the financial system. I've expressed in previous articles that there is clearly something very rotten in the financial system currently. Central banks are panicking and quantitative easing is back with a vengeance. The Fed is injecting a total of $200 billion monthly if you add up repos and promos, permanent open market operations. The ECB, which is the European Central Bank, has started with 20 billion euros a month. That is likely to increase since Lagarde most certainly will also do whatever it takes, as Draghi stated. Lagarde is the new person in charge of the European Central Bank, and Draghi is the chairman that just left. These are massive amounts and a clear indication that these two central banks are seeing real problems in the system. No true markets and no true prices. The whole financial system is just a massive paper tiger, but the world hasn't realized it yet. In effect, there are no true markets, no true prices, and no solid counterparty standing behind any transaction. Financial markets are a casino full of drunken gamblers. A small minority has rigged the system in their favor, and this is the way players like. Investment banks make massive profits every day. The investment banks make gambling bets that are exponentially greater than the risks they can cover when all goes wrong. They are totally aware that they are too big to fail. Too big to fail. Does anybody remember that comment? The world experienced the too big to fail syndrome during the long-term capital management collapse in 1998, as well as during the 2008 collapse. Both these times, the financial system was minutes from a total breakdown, but the investment banks had to be saved at an enormous cost. No senior banker was fired or prosecuted, and their bonuses continued to even more ridiculous levels. The winner takes all. With central bank printing and guaranteeing at least $25 trillion, the system was saved temporarily. But it wasn't actually saved. All that happened was that a smaller problem became an exponentially bigger problem. And this is where we are today. The 2006 to 2009 great financial crisis was never resolved, just deferred. So the proverbial can was kicked down the road again, but the next time it will be too big to kick. Don't confuse the gold price with the price of physical gold. Just to understand the size of the market, let's, for example, consider the Forex market. Daily turnover in the Forex casino, he's being humorous there, sarcastic, is in excess of $5 trillion. That means 1.5 quadrillion a year is traded in foreign exchange. That's 19 times the annual global gross domestic product of 80 trillion. But since global trade is only 20 trillion, global forex trading is 75 times the amount of goods and involves foreign exchange. So the majority of the 1.5 quadrillion forex trading is pure speculation, leading to the currency price being set in a casino with no relevance to the underlying goods traded. Thus, the price has very little correlation to the products or services traded. If we look at the gold market, exactly the same thing is happening. The annual mine production of gold. Now, this is very interesting. The annual mine production of gold is around 3,400 tons, with a value of 159 billion. If we look at the daily trading volume of gold, it is a staggering 187 billion, and thus greater than annual production. That makes annual gold trading 48 trillion, or 1,030,000 tons. All the gold ever produced in the history is 170,000 tons. So annual gold trading is an incredible 6 times all the gold ever produced in history, and 300 times the annual mine production. It is important to understand that this gold trading is virtually all paper trading with a very small percentage of physical. So for all of you who own physical gold and believe that last week's closing price of $1,460 per ounce is the real price of gold, please think again. 1,460 is the paper gold price in the casino. It has nothing to do with the real price of physical gold. Today we can still buy physical gold for the same price as paper gold. That is an anomaly which will not last. All the physical gold that is produced in the world is absorbed by the market in spite of relatively slow market conditions. The paper gold market will fail. The corrupt and manipulated paper gold market is guaranteed to fail. A market that is leveraged 300 times the underlying physical or real market has no chance of survival. When the holders of paper gold realize that they are holding a worthless piece of paper, the whole paper market will implode and gold surge. This is not a question of if, but when. And when is getting closer quickly. Stocks are very near the end of their secular bull market, and the coming moves down will frighten the world. Bond markets might hold out a bit longer, but will surprise everyone how quickly they will come down. The coming fall in stocks and bonds will shake confidence in all markets, with many investors looking for protection in gold. Other positive factors for gold are the major increases in quantitative easing happening right now, as well as negative real interest rates. The coming surge in gold demand can only be met with much higher prices. The physical gold market cannot satisfy the coming increase in demand at current prices. The only way that new buyers can find gold will be at much, much higher prices. So I advise holders of physical gold and silver not to worry. This correction is soon over, and in the next few years we will see the price of gold and silver reaching multiples of the current prices. But remember that you are holding physical precious metals as essential life insurance for long-term protection of your wealth and not for short-term price gains. I thought this article was very timely. I just had a meeting yesterday morning with one of my clients here locally, and that's exactly pretty much what we talked about, was the price of gold on his statement versus what I think, and Egon and a number of other folks think, that gold and silver will be doing over the next couple of years. So I know so far this is a lot of reading, a lot of listening, and so forth, and that gets back to this challenge that I proposed to everybody 2 shows ago, which is that it looks kind of bleak, I mean grim, for when these things start to happen. So if anybody has any ideas on a solution, by all means send them in. I mean, and you can do it anonymously. I'm not asking you to do this so we can single you out. You know, I just personally kind of look at, okay, where can they raise money? And one is taxes, and that's not a good thing. And one is the entitlement programs, by eliminating them or cutting them drastically, and that's not a good thing, because some of us are just now getting old enough where we're going to be able to, you know, register and take advantage of them. So, you know, there's got to be a solution out there. What it is, I don't know. I wish I did. I'd share it with you, and I'd get published, and, you know, we'd all be happy, because we wouldn't have this huge debt looming over not only our country today, But more importantly, for you folks that have a family, your children and your children's children. I mean, think about what is waiting for our kids. I look at my 12-year-old and I think, okay, you know, today is kind of neat. I mean, his big thing is Christmas is around the corner and he wants some kind of a Nintendo game or a Mario something, and you know, life is good in his world. But, you know, I'm thinking, okay, so 20, 30, 40 years from now, what will it be like when that generation is burdened with that much debt? Now, as far as some strategies, because there are several strategies. I mean, let's just face it. It's not just a, oh, you know, whatever you come in with, you know, here's the solution. Okay, you've got a X amount of money in your portfolio, you need 80%. Here's the solution. Oh, you've got 50 million and you need help. Here's the solution. It's not the same solution for everybody. It never has been. And those advisors or pundits that, you know, suggest that, one of the best things I thought that Carmen said was, he was like, hey, I'm not a financial advisor. I don't know what's right for you. I know what's right for me. And in his case, I think he said he was in gold 75%, I believe he said, and 25% in silver. Okay, so with that said, one strategy is the non-qualified versus qualified. Non-qualified is your non-IRA, non-defined contribution assets. They're over here. They have already been taxed. It's money that you can do whatever you want with, versus qualified, which is where at some point in your life you were able to either through a payroll deduction in a 401k or an IRA, some vehicle like that, which they call defined contribution, you were able to put dollars in pre-tax and allow them to grow tax deferred till now. And, you know, at this point, you've got them in there. At some point, you will have to pay tax on those. It's either going to be through required minimum distributions once you turn 70 and a half, or when you pass away, the beneficiaries will have to pay tax on those dollars. And we can get into some other strategies and stuff and other shows and stuff. But the non-qualified strategies, here's one for silver. Non-qualified silver. When investing your non-qualified funds into silver, the most advantageous way to do it is through 1 ounce pre-1933 silver dollars. The advantages over other silver products are privacy, performance, and liquidity. Pre-1933 American silver dollars are classified as semi-numismatic, which categorizes them into a private asset class similar to cash. However, these private assets require no state or federal reporting on any level. This protects your privacy, meaning no one except Tony Hammack, and in this case, National Gold Consultants, know of your precious metal investment. The pre-33 silver dollars perform better than other bullion products simply due to supply and demand. Excuse me. Government mints cannot reproduce these coins. This means that there is a finite amount left in the marketplace. As supply and demand run their course, you are left on the profitable end. These silver dollars will rise in value as their supply gets smaller. This, in turn, makes liquidity easier because companies, especially ours, want these coins back to fulfill the demand. So, if you have assets that are not in an IRA, they're considered non-qualified, this would be one way to use silver. Because you'd not only have the ability to profit, but you'd have that privacy feature. And, you know, I mean, I'm not here to ever say anything that would not be kosher as far as the Internal Revenue Code, but it's basically the Internal Revenue Code that is classifying these coins the way they are. So therefore, I mean, you could buy coins, you know, let's say today you bought $10,000 of these coins. They're running about probably $25 a piece. And let's say 2 years from now, that's double. And you basically sell them into the to market. You do not have to fill out a 1099, from what I understand, and therefore not pay taxes on that gain. So there's also a non-qualified gold strategy. Now, some of this is going to be redundant on what I just read, but you know, when investing your non-qualified funds into gold, the most advantageous way to do it is through quarter ounce 1/4 ounce pre-33 gold $5 coins. The advantages over other gold products are privacy, performance, and liquidity. 1/4 ounce pre-33 American $5 gold coins are classified as semi-numismatic, which categorizes them into a private asset class, similar to cash. So that, you know, from here on, it's pretty much the same. It's just that it's either silver or gold. In this case, we're looking at, you know, 1 ounce coins that were originally $5 gold coins and stuff. So the pre-33 $5 gold coins perform better than other bullion products simply because of supply and demand. Government mints cannot reproduce these coins. This means that there is a finite amount left in the marketplace. Pardon me. As supply and demand run their course, you are left on the profitable end. So, and by the way, because of that, you know, if you had some of these and then wanted to get out of them, National Gold Consultants would be the first place you would turn to sell them, because they want to get them back to have them in their inventory to fulfill the demand. Now, let's talk about qualified. So you're sitting there, you're listening to the show, and you're thinking, okay, Tony, all my money's tied up in IRAs, you know, or I just retired, or I changed companies, and I removed an IRA or a 401k to a IRA. What do I do? You know, because what didn't come out in that is that the pre-33 coins are not available in qualified plans. So that would only be for your non-qualified. So qualified silver. When investing your qualified funds into silver, the most advantageous way to do it is with the 1 ounce silver Canadian maple leaf coins due to their performance and liquidity. Canadian maple leaf coins consistently outperform bullion bar products and are easy to liquidate, since they are recognized by companies like National Gold Consultants. While other common sovereign coins like the American Eagle or Chinese Panda coins also carry these advantages over bullion bar products, they require additional premiums that the Canadian maple leaf coins do not, making the Canadian maple leaf coins the most strategic and beneficial choice. So, you know, we can get a little bit more into that particular strategy, but I can see the clock, and I know I'm getting short on time. If you had an IRA, we would probably be wanting to talk about Canadian maple leafs. If you were leaning towards gold, here again, there'll be a little redundancy, but this is the qualified gold strategy. And I hope you, let me make it clear, if you had an IRA, you could split it. You could have 50% in gold and 50% in silver. And the same goes with your non-qualified funds. So it's not just one or the other. You know, there is some flexibility there. Kind of like the gentleman who was interviewed earlier in the show. He's got 75% of his assets in gold and 25% in silver. So the strategy for qualified gold: when investing your qualified funds into gold, the most advantageous way to do it is with 1 ounce gold Canadian maple leaf coins due to their performance and liquidity. Canadian maple leaf coins consistently outperform bullion bar products and are easy to liquidate, since they are recognized by companies like National Gold Consultants. While other common sovereign coins like the American Eagle or Chinese Panda coins also carry these advantages over bullion bar products, they require additional premiums that the Canadian maple leaf coins do not, making the Canadian maple leaf coins the most strategic and beneficial choice. And all 4 of these strategies come from our friend Ryan Long at National Gold Consultants. So for those of you that were present on October 10th over at Prima's in Chesterfield and got to see Ryan and his presentation, you'll remember that he talked at length about these strategies. If you weren't there, you know, that was kind of a quick synopsis or summary. If you're interested, I can get you one of these packs that we passed out there. Very, very informative as far as the strategies and why gold and silver needs to be a part of your portfolio. As far as time, I think we're getting close to the end. Matt, what do we got?
We got 3 minutes.
3 minutes? What can we do in 3 minutes?
I don't know.
Well, we've talked so much about gold and silver, and, you know, I know some of this might be redundant, but, I mean, let's put it this way. If you're working harder for your money, just to cover the basics, and, you know, there's too much month left at the end of your dollar, you know, you might think about some of these things we're talking about. There was one study done in May of 17, so what's that, 2.5 years ago. 44% of the Americans said they could not cover a $400 emergency expense and would rely on credit cards, selling something, or borrowing the money if such an event arose. So, there's just a lot of things going on in our world right now. Some of us deal with it more so than others. I mean, if you're Jeff Bezos or Warren Buffett or Bill Gates, you don't. But, there's a majority of us that do. So, we're always looking for topics that you might be interested in. We've talked a little bit about Medicare Advantage plans in the past, which, by the way, we now can offer. So if any of you are interested, please give us a call. Once again, my phone number is 417-755-0700. My email is tony@thegoldaffiliate.com. I always like to acknowledge Jim and Pam Whining and Dr. Paul for giving me the opportunity to come in on Wednesday mornings and talk to you all about alternative assets. And hopefully, even if there's just one person in the audience that, hears something and benefits from it, then we're a success. I just got a message the other day from Jackie, for those of you that know Jackie in the Acts ministry, and she was asking me for an idea or a list of things people need to do before the end of the year, and so I'm in the process of putting that together, and I'll send that to her so she can put it in the newsletter, things to be aware of and take care of before December 31st, so that you've been a good steward of your blessings and resources that God has entrusted you with. And so on that note, I think we're just about done. Matt, thank you so much for producing this broadcast.
You're welcome.
And
It's my pleasure.
thank you folks for viewing. Please don't hesitate to call or write, and we hope you have a blessed day. Thank you so much.